traders and investors. Matt Buckley, call sign Whiz, the primary and weekly options model portfolio manager here at TGO. And markets having a little bit of a long overdue risk-off day, seeing the Dow essentially flatten and the SPOOs off about 3. But here's what's very interesting, and I want to point this out right away. The VIX was up about 2-3% and has had a nice pop in the past hour or so. But here's what I really want to show you. Let's pull up a 4-hour chart here. The market, the Dow's been up all day. It's about to turn negative, but the Dow's been up all day. And as I did my live trade brief this morning with my primary traders, the market was up about 15, 16 points, and the VIX was up. Now, this is a huge canary in the coal mine, guys. When the VIX is up, when the market's up, that should tell you something. That should tell you that people are not believing the hype. They're not believing this rally. They think it's long in the tooth, and they're starting to look for protection. Where do you go for protection? The VIX. And the VIX is having a nice 7% move in essentially the past couple hours. That's a pretty healthy move for the VIX here. And essentially the market's flat. If you look just landed from Mars and looked at the numbers, you'd be like, all right, well, the Dow's flat and the S&P's kind of flat, but the VIX is up 7%. Big canary in the coal mine, guys. And here's another big canary in the coal mine that this rally's long in the tooth, gold. Look at the past couple days for gold. Really starting to catch a bid here. As people go risk off on equities, they tend to go to the yellow metal, right? That's kind of a flock to safety, so to speak. That's where people head. So VIX up, gold up. It's starting to, market veterans such as myself, starting to feel it in the knees and see these canaries dropping dead in the coal mine, that we might see something coming. Some other interesting stuff to report. Goog. Look at the Goog. As I've been telling my traders in my trading services, running out of steam. The news is already out there on Goog. Everybody thinks it's going to 1,000. All the analysts have come out and raced to the microphones and said, Goog 1,000. And then that's like the kiss of death. Remember Apple at 700? And everybody came out and said Apple 1,000, Apple 1111. And then it rolled over and imploded. Not saying Google's going to do that, but at least it seems like buy on the rumor, sell on the news. So the news is already out there. Everybody loves Google. Everything's great. And take a look at this. Let's take a look at the past 6 months between Goog and the other shall not be mentioned tech name, Apple. You want to talk about a great pairs trade? Look at this. Look at that, Goog versus Apple. So as money's rotated into Goog, it's rotated out of Apple. Great potential pairs trade. Actually, exponential moves out of Goog here. Goog up 17%, Apple down essentially double that, right? 39% there. So very interesting pairs trade. But Apple had a little spike yesterday on some watch news or whatever it was. And then Jefferies analyst came out today and downgraded Apple. No Apple TV this year. And, the Apple Watch is kind of a joke. So Apple's taking it on the chin as well today, which is great for us in our weekly options model portfolio. Put on 2 trades yesterday during our live trading session, our 30-minute live trading session, an Apple Iron Condor and a gold bull put spread, and couldn't have placed 2 better trades. In 2 days, we're up, over $1,000. So looking pretty nice, and a $1,700 gain today in our weekly options model portfolio. Obviously, options expiration week, but there's not a ton going on the flight schedule. Yesterday, really no economic data to report. Today, the biggest report out was the NAFIB. It's a small business report that comes out. It was essentially flat. We were looking for a little bit more, but here's what's very interesting was the very partisan tone to this supposedly impartial report. But folks, the NFIB Small Business Index report is small businesses. It's full of people that are getting hammered, maybe even being forced to become C Corps from S Corps because of the Obama tax increases. Yeah, they're the Obama tax increases, just like they were the Bush tax cuts. So small business owners not in love with the president, not in love with his policies, and this report reflected it. Wednesday, we're going to get some look at retail sales. Thursday, weekly unemployment claims, and some PPI. And then Friday, some CPI, some inflation numbers, Empire State Manufacturing Index, the cap rate, and also University of Michigan consumer sentiment. So not a heavy economic week, which tells me that, like I said, VIX up, gold up, all sorts of stuff. All the canaries in the coal mine are pointing to a little bit of a break here. Let's take a look at this rally, guys. As you can tell, it's starting to get a little exhausted up at the top here, and I think we move sideways this week, especially as we get ready for the Armageddon budget battle, the rumble in the Beltway between Boehner and the president. I don't think it's going to be the big one to steal from Sanford and Son. I don't think it's going to be the big one that the heart attack that this market is going to see. I think that's going to come in earnings. I think Q1 earnings are with the Obama tax increases, the gas being at record highs, just a bunch of clouds on the horizon. I think earnings will be the thing that drives this market a little bit lower, not the budget battle. The budget battle is going to cause this market to pause and move sideways, maybe even pull back a little bit, but not the correction that this most hated rally deserves. Okay, so good stuff going on at TGO. We had a great 2-hour live trading session this morning, and like I said, our weekly options model portfolio is doing great. Nice gains today in that portfolio as well. Okay, so got to run. Happy hunting. Make sure you hedge, and I'll be back with tomorrow's SITREP here at Top Gun Options.